All right, well, welcome to the Bookmap educational course. This is going to be a series here, parts 1 through 4. We're going to go through part 1 today, tomorrow part 2, and then on Friday part 3. And then next week we'll do it again and then get to part 4 as well, which will be about more advanced features. Today's course is going to be Intro to Basic Market Mechanics, and I hesitate to put the word basic in there. This is actually, it's essential to understand this information, but it is as well, actually gets quite complex pretty quickly. But these are the mechanics that move the market, okay? So we're going to go over this in some detail, and then show some examples in Bookmap and how you can identify these. All right, risk disclaimer. Trading equities and futures involves substantial risk of loss, is not suitable for all investors. Past performance is not indicative of future results. For more information, you go to bookmap.com, become a member there, and you'll have access to a lot of the free resources. And then you can reach out to us at support@veloxpro.com or support@bookmap.com. And I want to show a few more resources here. Here is our website. We also have Twitter. You can follow us on Twitter. And then we also have a YouTube page. And I'll reference this a little bit later because there's a few videos I want to show you. Okay, and all right. Let's move on. Okay, a little bit about me. My name is Bruce Pringle. I've been a trader for 10 years in a variety of markets. I'm a product specialist at Bookmap. I lead the education trading here at Bookmap, and an expert in order flow and market microstructure. Okay, I just showed the Twitter and the YouTube as well, so and support@bookmap.com. All right. Okay, so overall, this series, the goals here, what we're going to go through in this educational course. Okay, we're going to provide you a structured understanding of today's markets. We're going to cover theories and practical uses, and we're going to give you something to take away and use. All right, so we're going to give some strategies and some setups, some training exercises, and this is all hopefully going to allow you to with a high potential here to enhance your trading execution. Right? This is going to be a reference guide for you to return to if needed. You will always have it. And then during the daily webinars, we are going to cover this in the live markets. Okay, so you'll always have the course to come back to, but in the live webinars, we'll go over current condition of the live markets using the same techniques used or learned from these courses. Okay, and we're also going to introduce you to advanced HFT or high frequency trading concepts and applications, and this is both for futures and equities traders. Okay. All right, today's course, what we're going to go through, we're going to start off with basic terminology. It's important to understand that we're all on the same page here. And then we're going to get into the market mechanics and these mechanics visualized. Why price moves, price sweeps, why price trend stops, and price behavior, how it moves. And then we're going to get into some of the training exercises later. Okay, who is this course for? Right, so this is for retail and professional traders alike, prop traders, dome or price ladder traders, and because we can show the historical limit order book and order flow, this is also applicable to swing traders and spread traders. Right, so for the HFT environment, a lot of the quants and HFT algo traders are especially going to understand this today's lesson, but there is still a lot of good information in here for the quants, financial engineers, and students, and this can also apply to compliance officers. All right. So terminology, we're going to start off with liquidity. Okay, and we're talking about liquidity here, obviously in the marketplaces. We're talking about the limit orders. Okay, the depth of the market, where traders are lining up to be buyers or sellers. They're bidding and offering in a market, and they're providing liquidity. They are making the market. Without them, price would be very, very hard to define. Okay, the BBO. Okay, this is the best bid and offer. Okay, that's the inside market, exactly where a price is currently trading. Hitting the bid. Okay, that's where we're going to talk about aggressive volume that takes liquidity off of the best bid. Okay, someone hits the market sell button and they'll take liquidity. Lifting the offer is the opposite. They'll hit the market buy button and they will take liquidity off of the best offer. Okay, the LOB, the CLOB, and the DOM. Okay, limit order book, centralized limit order book, and depth of market. Okay, they're all basically the same thing. The CLOB is kind of important to understand though, because the centralized limit order book is the really what we're talking about here, and taking the data from there and then transposing that onto the chart historically. All right, we're going to talk about aggressor volume classification. That's the market buys and the market sells. The intent of trade. That is the traders lined up on the bid or the offer in the depth of market. Okay. The current order book is the current state of that order book right now. What's going on in the order book? The depth on the offer, the depth on the bid, the best bid and offer, the last traded volume, and the spread. Okay. And then we're going to get in the historical limit order book and order flow, which I'll define it. We'll see as we go on, because we record all of this data in that current order book and then extrapolate that and transpose it onto the historical chart. Okay. All right. Let's see. How can the order book and order flow data help you? Right. Well, as I was just explaining, the current state of the market, any DOM will do this. All right. There's no lag to it. It's showing you the liquidity at price levels. It's giving you the best bid and offer and spread, the current price, and the last traded volume. It is the current state of the market. Okay, and then it gives you an understanding of where price might go, looking at high liquidity that you can target. That's going to be on the depth of market in on the bid or the offer. Okay, and this gives you an advantage over the competitors. You can start to understand their activity. Recall that this is a zero-sum game structure within the marketplace. Okay, and we're going to integrate this information within the historical limit order book shortly. Okay, so market mechanics. We're going to go through some basic examples, and now this course is about education. Okay, but we're going to show Bookmap, and why? That's because it visualizes this behavior very, very nicely. And in fact, the story of Bookmap, we came from the HFT environment, developing algos, trading in the high-frequency environment, and needed some sort of visualization of where those trades were getting filled. Software was developed to understand that, comprehend it, and then I thought that was a pretty good idea, and that led into Bookmap becoming a product. Okay, so that's why we're going to be showing Bookmap here, is to visualize these mechanics, and you'll see exactly what I mean in just a minute. Okay, so I need to show Bookmap. I need to go over it here. What are you looking at in the user interface? This whole area here is historical data. Okay, here is your current data here. Okay, this is your best bid and offer here, your last traded volume here, and you'll see that this is the depth of market I'm going to show you Bookmap in just a moment here, but this is the live market, is a graphical representation of the depth of market, okay, the current state of that market. All right, so here's your best bid and offer here, your depth on the offer, and your depth here on the bid. Okay, all right, so let me show you Bookmap, and we'll get it up here. Okay, all right. Okay, so here's Bookmap. We're looking at the S&P E-mini, and let's see. I'll start off here, and we'll just work backwards very, very simply. Okay, I'm going to take off all of the data here, so that we have something very, very simple and straightforward to look at. Okay, and indicators. All right. Okay, so most of us are very in tune to understanding a candlestick chart. Okay, so here it is in Bookmap. All right, no further explanation is needed. You can see that between each vertical dotted line here, I have 15 minutes worth of data. Okay, I'm going to start layering information on top of this. Okay, first I'm going to add the best bid and offer. Okay, now what we're looking at is the historical best bid and offer. Okay, we can let me zoom in a little bit here, so you can see this move to the upside here. Well, this was the best bid and offer within this candlestick period. Okay, so this is a 1 minute chart, and you can see the closer of that candlestick, but here's where the best bid and offer was during that time. Okay, the red line is the best offer, the green is the best bid. Okay, now let's add on some volume dots. Okay, so now what we're looking at here is the volume traded within that best bid and offer. Okay, so this candlestick that you see here, this 1 minute candlestick chart, well, you can see the where that volume took place. You can see the type of volume it was. It was a lot of buying that took place, and you can see that we're giving you the overall delta of this information as well. So there was some selling in here, but not as much. There was more buying. In fact, I'm going to zoom in here to this area. I'm going to take a quick closer look here. So as I start to zoom in, we can really zoom down and show exactly what unfolded in these markets. Okay, and we can see the algorithmic activity here at very sub-second levels. And we're down at the microsecond level here. Okay, all of this data is recorded, but you can see as I zoom out, this just becomes a bigger green dot. Okay, and then you can see as I continue to zoom out, we give you the overall delta because there's so many trades that took place here that we need to we only have so much screen space to give you something that is useful. So this data is aggregated only visually or graphically. Okay, and you can see now what comprises this candlestick. Okay, from the previous one here. So this is very much like a footprint chart. You can start to understand where the volume took place, how much, what type, and within how much of a time period here. Okay, so that's the traded volume. Now we have that on the chart, and now we're going to add the heat map here. Okay, so let's add that. Okay, so now what are we looking at here? Okay, well, all of this heat map is the historical limit order book. It's all derived here from the DOM. Okay, so as I was explaining earlier, let's just go right back to this current market. This window here, we're giving a graphical representation of the liquidity in that limit order book. Okay, so like right here, we can see 1,347 contracts. Well, that area is painted bright white in the current order book window here. So we know right away there's a reference here, very high liquidity on the offer. Okay, so that's what it's just a graphical representation of that limit order book. Now, where this really gets interesting is that's the current market, this window here. But we take this data and we transpose it onto the historical chart. Okay, let me zoom in just a little bit, and you can start to understand the behavior of these traders here on the bid. Okay, look how they're adding and pulling liquidity in this area. Okay, so we can start to understand their intent to trade at some of these levels. Do they really want to be buyers or not? Okay, so that's the Bookmap interface in general, and we'll look more at it a bit later. But I do want to compare this to a DOM just so you guys really get this down. All right, so here's our DOM. We have our best price here. Well, let's go through the price ladder here, as you can see in the DOM, and here it is in Bookmap. Okay, the depth of offer. Okay, here it is in the DOM, these numeric values here, and you can see that those numeric values match up here in Bookmap. Now, I also included the graphical representation of these numeric values here. Okay, that is the offer here on in Bookmap. Okay, here's the depth of bid. Okay, so this is the liquidity here in the limit order book in a DOM and then in Bookmap. Okay, and then here's our inside market. All right, our level 1 data, our best bid and offer, our BBO. Okay, so we just have our best bid and offer, and you can see they match here within the DOM. Okay, and then finally our last traded volume. This number here matches with the last price, and here's your last traded volume with your last price here. Okay, all right. So now let's get into the integration of that current data. Okay, the going through the order flow data integration here. The current data, the real time in the DOM is fleeting. You know, it's you'll see those numbers display very quickly, and then they'll be redisplayed with and refreshed with new data. So you'll have to remember those areas that may have been high liquidity or low liquidity. And that can be a little challenging to do, because you have to remember specific areas, and then when price comes back to those areas, are they still bidding or offering? Do they still show interest? That's where the historical limit order book and data comes in very, very handy. Okay, so we record all that data, and then you can see and understand how we were looking at Bookmap. We can understand how it unfolded in detail in specific areas. Okay. And it's very easy to see it, and that gives us context to those areas as well. Okay, so like I mentioned, let's say we have a double top pattern. Well, they were bidding there before or offering there before with high liquidity, and if we return back to that area, are they still interested? We'll get context from understanding the auction in those areas. Okay, this gives you a nice advantage over your competition. All right, so now let's jump in here, yeah, here's our historical DOM, our current DOM in the book, and then here's our current DOM in Bookmap. Okay, and jump in here, and why does price move? Okay, we're going to cover aggressor volume, okay, market transactions, and the intent of trade. Okay, the a centralized limit order book auction. Okay, so why does price move? Okay, aggressor volume explained here. We're talking about the limit orders they're passive. They sit or they rest within the depth of market. Okay, they provide liquidity. They want to be buyers or sellers within those specific areas on the price ladder. Okay, market orders, this is the aggressor. They cross the spread and they consume the liquidity in the depth of market. Okay, they'll consume the limit orders. Okay, so most of us are familiar with this, but this is the classification of the volume that we'll be looking at here, is the aggressor classification, the market orders. Okay, the transaction, all right, price trades where this aggressor is matched with the liquidity in the best bidder offer. Right? And then now let's start to jump in here, and we'll go through some examples. Okay, here's current price trading on the best bidder offer. Okay, here the last trade that just took place here was a market buy with a volume of 1 right here. Okay, now this is just illustration. We can see the spread here. We have the liquidity within the best bid and offer here. We have 12 contracts on the offer, and on the best bid we have 16 contracts. Okay, this is where it last traded here, so that is the current price. Okay, now a very simple market sell order. Okay, the aggressor hits the bid with a market sell order. Okay, they consume the liquidity here, so we did have 16 contracts. Well, they consumed 1, and now we have 15 contracts, and price has now changed. Price has moved, okay, 1 tick. Okay, this is how the market moves. The aggressor is the one that can move the market. Okay. Now here's an example of what that looks like in Bookmap. All right, you can see the aggressor here. These little green dots here are market buys. Okay, and price was trading here at 52.89. We're looking at oil. Okay, and then you see the aggressor here. The market sells with the red dots on the best bid. Okay, so it's just going back and forth here. Now you can see something pretty interesting already, and you can see the complexity we're going to get into with just this very simple binary example. We're recording here algorithmic activity. Okay, I mean very clearly you can see the time and the orders and the size of the orders are all equivalent here. So these two algos are battling back and forth. Okay, and you can start to understand that this is really how these markets trade today. Okay, there's all these algorithms that are trading back and forth, and we can understand their behavior here within the historical limit order book. Okay, all of that record, which would be rather difficult to see in the DOM. Okay, here's another example as well, and we're going to see a lot of this kind of information and data displayed in Bookmap. This is an algo here that is lifting the offer, but it's not really lifting price here. Okay, it's trading on the best offer. Okay, and you can see it's very clearly with the mechanical movement here of the buying and selling that they are consuming liquidity here, but they're not lifting price against them. Okay, so they're accumulating a position here over time without moving price against them. Okay, so now let's get into next, why does price move? The imbalance in the intent of trade. Okay, so what we're going to talk about here, large imbalances in the order book that skews the auction. All right, now the size of these limit orders is going to affect the best bid and offer. All right, so they may pull liquidity, they may add liquidity. There might be a big spread. Now, when the mechanics here operate, and you get our market sell order to move price, it hits the bid. Well, we might see a big move in that price without much volume. It's because they pulled their liquidity. There was an imbalance, and they pulled their liquidity on the bid. And the transaction occurs at a new lower price. Okay, let's go through the example. Right, here's our volume of 1. Okay, and then they hit the bid here with another volume of 1. Right, so 12 contracts, 16 here on the bid. 1 is consumed. That becomes the current price. Now we have an imbalance here in the depth of market on the offer. Okay, you can see previously we had pretty equal book here, right? Rather equal. I think there was a bit of a skew in the on the bid side, but we can see this is rather balanced, right? Now we have an imbalance. Okay, 120 contracts versus it was 16. Okay, 24 contracts and 32, they turned into 85 and 72. So we have a very heavy imbalance here in the limit order book. Okay, they're offering here with a lot of with high contracts. Okay, big contract size. How that affects price? Okay, well, we can see here these 15 and 18 contracts here on the bid. These guys, they get scared. They don't want to trade any longer at these levels, and they'll pull their liquidity. Okay, so our last trade still occurred here with that volume of 1. Okay, but the best bid has now shifted down a couple of ticks. Okay, so now we're down here 2 ticks lower at 22 contracts. Okay, right. So with a volume of 1, okay, sell market volume of 1, they've moved price now 1, 2, and 3 ticks here. Okay, we consume 1 contract here, and that becomes the current price. And this is how the intent of trade can affect and move price. Okay, when in periods of high liquidity, you're going to see this all the time. Okay, I'm sorry, of high volatility. Fundamental releases or economic data releases, as well as just a skittish market. There's a lot of volatility because there is a lack of liquidity, and in any imbalance with high liquidity, you'll see pushes and pulls of markets very quickly. Okay, this is what this looks like in Bookmap. Okay, we have high liquidity here that stays in the book, but we come up into this area here, and they get very, very aggressive. We get an imbalance in that book. Okay, and you can see that how price is affected here. Okay, that is pushing price down into an area, and you can see we're going to get very advanced about this. We're talking about potential spoofing here into liquidity here on the bid. Okay, but the imbalance in that book. Okay, so advanced concepts, the potential spoofing here, imbalance to drive price lower and maybe get bids filled at lower price levels. Okay, there's also strategies that you can, and we're going to go over later with momentum, looking for momentum, or spoofing. You can start to look for that, or layering, icebergs in ignition algos. All right, so let me cover the ignition algo here. You can see the example with the imbalance here in the limit order book on the offer. We see it once. They come in again. That algo is still working here, and then finally you can see this one here, and it finally does drive price lower. Okay, so now we're going to start to understand and comprehend this data within the historical chart. Okay, because it's all recorded here, and you can see the we're not talking about just this is not just milliseconds of data. This is 10 seconds between each vertical dotted line here. So we're looking at like a minute here of price activity, a little bit more. Okay, but you're going to be able to utilize and consume that data and look for a potential order execution here that's going to be enhanced. Right, here's another example. We have very high liquidity here on the best offer, jumps into the book very quickly, and I'm going to show you a sequence here. Okay, so we can also see them down here on the bid at this 2420 level, and let's how did this unfold? Okay, so here's that same action is here again, and we can start to see how it affected price. Okay, it affected price, it drove it lower into some of these lower areas here. Okay, and we're gonna talk about this concept a bit later, but I'm going to introduce it between short-term high liquidity skewing the auction Okay, and then longer term liquidity here that remains in the book. Okay, so this longer term liquidity is already understood by the auction, right? But this new information that jumps into these areas and then pulls, it needs to be digested by the market. Okay, and you can see that imbalance, that heavy imbalance, has an effect on price. Here's another example. You can see this is the open and 9:30 open here. We see an imbalance here driving up into high liquidity here, longer term high liquidity. Okay, it was basically in the market from the get-go of the 9:30 open. And then here's our imbalances with shorter term high liquidity, okay, driving price up into some of these areas. Okay, so next concept, let's go over sweeping of the order book. So what we're talking about here is just not moving price back and forth. We're trading through one or more price levels. This is an important concept to understand. This is typically how price trades into a new range. All right, and we're going to witness this with a combination of imbalance in the order book and very sizable aggressive market orders. Okay, so here's an example. We'll start off again here. Here's our market buy with volume of 1, but now you can see here we have a market sell with a volume of 50. Okay, so what occurs? They're hitting the bid with 50 contracts here. We have 15 contracts on the best bid at this point. Okay, well, it sweeps through that 15. So 15 trade. That is the last trade that took place here. Is still the current price. Now, what remains of that 50 lot order? Well, it's still a market sell, but it already swept this price level, but it traded 15. So there are 35 contracts remaining in that big market sell order. Okay, so what occurs? Next price level, still hitting the bid. It sweeps through this price level here with the 18 contracts, right? And you can see we swept it, and now there's 17 left still remaining in that 50 lot order, and it's still hitting the bid here, but we have 22 contracts here. Okay, so what unfolds, right? Okay, it takes 17 of them, but there's still five remaining. Okay, and that is our sweep of the book. Okay, this 50 lot now is filled. Okay, and you can see we swept down you know, a few ticks here into lower levels. All right, important concept too. A lot of times, and it depends on the market. Thinner markets, you'll see this a lot more often. The ES, you'll rarely see this, but you can see the spread has widened out here, right? Because they swept through all these levels here, but where's the best offer? Okay, it's still up here at this level with these 12 contracts. Okay, so there's a vacuum here within there's a bigger spread. The spread widens out between these two. Okay, a lot of times the ES though very, very quickly will fill in, right? What does that look like in Bookmap? All right, well, this is a fundamental release, and we can see the just massive red dots here sweeping each price level as it goes lower. Okay, you can see the vacuum effect that we're talking about as we return almost back to where we dropped from here. Okay, here's another example, and this is a market buy. Okay, sweeping up to new levels. Okay, we see this is the initial release. You can see that's here's at 10:30. This is oil. It's the oil inventories. Actually, nothing really occurred for a few seconds, and then all of a sudden they really lifted the offer here. Okay. Okay, let's look at some of the advanced concepts and some of the sweeping here. All right, like for example, looking for pullbacks. Start to enter if you believe that the sweep here was we're going to start to accept down to lower levels. Well, then you can start to enter some of your limit orders in some of these areas here. Okay, if we're looking for that pullback. into some of those areas because there's been a vacuum. Right, guys, I see your questions here. I'm going to go through all the questions later, but I want to continue on and get through the presentation. Okay, so you could also play momentum, looking for that sweep and then joining in, or maybe you're looking for rejection, and I'm going to show an example of that. You're also going to see book flipping. You might see sweeps into icebergs, and then those ignition algos as well. Okay. All right. So here we are with an example in oil again, and you can see we swept down through to a lower level here. And it looks like price is starting to accept down below this lower level here. Here's our pullback to it, and we get another continuation. All right, we actually see another sweep to the upside. Okay, and this one it sweeps up into basically where it dropped from up here, but this is a little different here, and I'll explain in just a second. All right, we see yet again another sweep. Okay, price starts to accept above this level, and we sweep through it. We get our pullback here, and we sweep on down yet again. And we can see very nicely and cleanly we get our pullback right to where we dropped from. So this concept of sweeping, although the mechanics look very simple, is very profound. You can start to see we're going to lead to a very nice setups to understand, looking for those vacuums, or maybe you want to join the momentum on the way up. Anyway, we can start to look at some of these levels here, and then also how they start to affect the volume profile. We're going to cover volume profile tomorrow, but you can see as I drew a line across here, we're going to have our point of control up here, basically for this range. Whoops, sorry, and that's where we come up and test. Okay, now the sweep down through this area here is going to be your low volume node. Okay, and you can see it here. And yet again, here's where we swept down and broke from again here, and that is your low volume node here. So now you're going to start to understand the sweeping action and moving to lower levels or higher levels within the volume profile. Okay. Now here's an example of rejection. Okay, and we can see that this is again oil. That we have a range situation developing here. We sweep down into a lower level, but we return right back into the range. Okay, so you can also play it that way. If this is a lot of the times what you'll see in this kind of behavior are stop runs, getting traders stopped out, running the wrong way, maybe buying or I'm sorry, selling the breakdown here, and then trading back into the range, and then you can see they actually traded to the opposite side here and grab all the stops on the other side. All right, so there's the potential here for understanding this and trading it as rejection. Okay, here's a concept here of a flip of the book. So here's our sweep, as you can see, and then here's the limit orders on the bid here. Okay, we swept through it, and yet now what do we return back to? Okay, actually I would start to anticipate returning back to this level here, but now we're starting to understand a flip of the book, because high liquidity here on the bid has now flipped to the offer, and that's where we come back and test. All right, not only once, but twice and 3 times here. Okay, so you're going to start to extrapolate and understand this data within the historical limit order book chart. All right, so that's sweeping. Let's get into why price trend stops. We're going to go through absorption and exhaustion. Okay, absorption is the limit orders that take up and absorb all the aggressive buying or selling. Okay, it could also be iceberg orders, but we're going to cover that in the advanced session. And let's go through an example. Okay, start off again with our market buy volume here of 1, and that's where current price is trading, but there's a distinction here. Okay, we have longer term high liquidity down here in the depth on the bid. Okay, so 125 contracts and compared to very, very high compared to all the rest of the book. Okay. Now let's just speed things up here. We sweep the book lower into some of these lower levels here. That 50 lot is, you know, there were 22 contracts here. It takes us 17. Now there are just 5 left, and that is the current price. Okay. So we still have, now we're down at 1 tick away from our 125 contracts. Okay. So they sweep it again here. Sell market order volume of 50. Okay. What happens? Okay, they hit the bid, those 5 trade, and now we have a volume of 45 trading into these 125 contracts. Okay, the 45 trade, now that becomes 80 contracts here on the best bid. They absorbed all of those contracts, or those 45, okay, from that 50 lot. Okay, they hit it again here. Okay, market sell with a volume of 50. What unfolds? Okay, so hitting the bid, we have 80 contracts here. Okay, 50 of them trade, and now there are 30 left. They absorbed all of that order at one price level. Okay, so now this one trader, or let's say it's one actor, one trader, they came into the market very aggressively with 150 contracts. One swept the book lower. One swept the book just one price level and then was absorbed, and then that last 50 lot was completely absorbed at that price level. Okay, and there are 30 contracts still remaining at that price level. Okay, so let's say someone jumps in now and with a market buy volume of just 1. Okay, well, if the spread is still had widened out after that sweep, and remains that condition just with a volume of 1, they've moved the price up 3 ticks. All right, so this can allude to a lot of different things. We can start to understand trapped volume in some of these areas, or you know, maybe you're trading down into an iceberg order here on the best bid. Okay. All right, so as mentioned, the aggressive buyer lifts price or lifts the offer with just 1 contract, and that becomes, they take one contract of liquidity off of the 12 here, and that now becomes the current price. Okay, let's go through the example here in Bookmap. What does this look like? Okay, here's our high liquidity here on the offer. Okay. We see the aggressive market buys trading into that area, and they remain in the book. Okay, these guys up here at 44.20, they want to be sellers, and you can see they continue to, the aggressive market buys continue to trade into that area, and the limit orders on the offer absorb all of that aggressive buying. Right, it finally dries up here, and then you can see that they very aggressively then hit the bid with large market sell orders. We trade below that level. Interestingly enough, just like the sweep, we trade now below at a new level here. Okay, and you can see some same concept here down on the bid. They're starting to absorb it down here, but they actually overpower the limit buys here, and they sweep through that level. Okay, but this is the absorption part up here. Okay, another example, trading into high liquidity here. You can see the aggressive market sells taking place here on the best bid, and they just don't take it any lower. Okay, so any of that aggressive selling has been absorbed, and then we can see the price, they start to lift the offer with aggressive market buying. Liquidity pulls here, and we continue on up. Okay, let's go through a few advanced concepts. V-bottoms, V-bottom reversals, pullback strategy that we covered earlier. You can look for stop runs, trap volume, and book flipping as well. Let's take a look. Right. Well, here's our sweep down to the bottom. And then you can see, look at how they very aggressively come in here. This is gold, and they come in here with 149 contracts at this price level here of at 1244.5, and they remain in the book. Okay, you would maybe start to anticipate a move back to where it broke from, but this information here, understanding the depth of the market, gives you that insight that we're not going back up to here, because these guys want to be sellers at a lower level. All right. Here's an example in Apple. Bookmap is also available for equities in the U.S. And let's go through this really nice example here of absorption. Okay. You can see the aggressive selling into some of these areas here, and finally down here we see 2,557 contracts trade on the best bid. You can see it's all selling here, okay, in our profile, right? And you can see all of the selling here. Look at the buying here. There's very little, right? Completely absorbed by the larger traders with their limit orders, okay? And this is going to be our example with the V bottom here, but all absorbed here, we do actually get that retest, but we don't go all the way down to the bottom. We can start to anticipate those retests to maybe where we start to see some buying come back in, right? And this is what it looks like on the higher time frame. Okay, so a real very quick, sharp drop into an area here on the bid, completely absorbed, and you can see the reaction that it had in the V bottom. Okay, all right. So that's it with the absorption. Let's go over exhaustion. Okay, what is it? It's the lack of aggressive volume activity. Okay, so you can see here we're going to go through the market, the buy market order here, a volume of 50. Okay, and that had already occurred, so we still have 12 contracts here, and that is the current price, okay, on the best offer. Okay. Now they come in and they sweep the book lower here, 15 contracts, and then 13, and then they're still hitting the bid here. Now we have a sell market order volume of 5 occurs here into these 10 contracts. I do need to just mention here, look at the lack of, now it doesn't have to be lack of liquidity for it to be exhaustion. Okay? It's a lack of aggressor volume that makes it exhaustion. But a lot of times you won't see very high liquidity. All right, so we come down into, and now we're hitting the bid with 5 contracts into 10 on the bid. So it trades those 5. And you can see that becomes now the current price. Okay. Next example, they continue to hit the bid. We have another sell here of 5. What occurs? Well, they sweep that level. Okay, that's your last traded volume. Now we're trading down here on the best bid into these 8 contracts. All right, but that's it. There's no more buying. There's a lack of, you can see that it started off as pretty big, but it started to dry up in some of these lower levels here, and instead now they don't come down and test the best bid here, these 8 contracts, and instead they market buy with a volume of 5, lifts the offer into these 10 contracts here, and that becomes the current price. Okay. All right, and this is what it looks like in Bookmap, and you're going to see this all over the place in Bookmap. All right, we can see we come down into an area, and they're pulling liquidity in this area here. But look at the aggressor. Okay, there's no trades that took place here, here, here. We finally get a little bit of market sell here, but we test a little bit lower, and there's complete lack of trading 1 tick lower. Okay, well, we rotate back up, we come back down again, and complete lack of trading. No one's interested in trading at this level. Okay, so the mechanics here are that if no one wishes to trade at this level, well, price is going to trade higher. Right? It's going to look for liquidity now on the best offer. Okay, now it's looking for sellers. And where are the sellers? Well, they're up in some of these areas, but you can see them pulling their liquidity. All right. All right. As mentioned, a lot of times what you get with this absence of the aggressor is in these trending markets, you'll see the pullbacks, and you'll see very little aggressor volume take place at some of these areas. Okay, so you can see a complete lack of, we have 1, 2, 3, 4 basically tests here into this price level in gold, and no selling. Okay, so we rotate back up and we actually sweep the book one higher. We get a minor pullback here, and you can see there's no one interested in selling. Okay, the sellers are out of the market basically. Right. We can also see, look at the limit order book here. We see a skew in that auction. So where do we come back up into? Okay, we trade back up into it's searching for that high liquidity on the best offer. And we start to trade into that area. We get a pullback again, and we can see lack of aggressive selling. Right, another sweep, and then you can see we get the nice pullback here, but a lack of selling. All right. So start to piece these together into some strategies looking for exhaustion points after a sweep. All right. Okay. Advanced concepts here. Starting to understand that lack of activity. One concept I just wanted to go over here was it doesn't necessarily mean that there's a lack of high liquidity. Okay, that may exist. Right, in this example it does, and it looks like they're starting to absorb it here, but then there's just a lack of aggressive buying. Right, we get 1, 2, 3 tests here, and no interest at all. We start to rotate lower. Okay, and I also want to integrate this into the bigger picture, since we're looking at microstructural stuff here. In the bigger picture, this is what occurred. Right, we can see the aggressive behavior with the limit order book, wanting to offer at a lower price, and then no one's willing to really take them on in these areas here. All right. Okay, and again, that same concept of, you can see there's a little bit of trading that takes place here, but look at the overall. Right, as we sweep higher here into a new price level, and there's just very, very little aggressive selling compared to the aggressive buying. Okay, a lot more green dots here. Right, some sideways action here, but now you start to see in the trending areas, a lot of green dots up in these areas, very little trading here on the pullbacks. Okay, and you can see the trending environment higher, and where do we go? Searching for high liquidity that you find here on the best offer. Okay, all right. So that's some of the basic market mechanics, but and this is essential stuff to understand. But we also want to integrate into this how it, not just why it's moving or stopping, but how. Okay, so the volatility, the depth of liquidity, thinner markets versus thicker markets. Right, thinner markets like gold, for example, you're going to see a lot of volatility. You're going to see a lot of price movement backwards and forwards because there is a lack of liquidity. Right, thicker markets like the S&P or the bonds are going to be slower moving, and you're going to see a lot of pullbacks and retracements back to areas where they broke from. Okay, start to comprehend the behavior of the price movement, and you're really going to gain a lot of insight with some of these basic mechanics. Okay, looking for flurries of activity, okay, within the auction or the volume, or within time cycles like the S&P cash open, okay, or in the NASDAQ as well. Start to understand the speed of the markets. How quickly is that occurring? Or was it a slow movement that took place? Okay, it's going to give a lot of insight to some of these basic mechanics. All right, yeah, the fast, slow, retest, liquidity shifts, etc. Each market has its own unique characteristics, but these basic mechanics are all the same. All right, so let's end up here part one, some of the training exercises. Okay, so go back and start to identify these basic market mechanics, okay, that we just covered. Start to mark up your charts. The more the better. Okay, look for the variations in how price moved within these examples. Okay, you can consider using the Bookmap replay mode. Is an excellent way of seeing this data. You can replay it again and again within that replay file. And then you can start to draw your own conclusions from these examples, okay, noting the different times, the different markets, the varying liquidity, the speed that it moves, etc. All right. Once you start to comprehend that, you can start to anticipate these kinds of mechanics occurring in real time. Okay. So understanding these basic market mechanics are critical. Okay, this will lay the foundation for the next few lessons that we're going to cover. All right. Okay. Tomorrow, what we're going to go through in part two is we're going to take a step back and look into the bigger picture historically and start to understand order flow within structures. Okay, microstructure and even maybe a bit bigger. Okay, and we're gonna go over auction theory and volume profile. All right. Okay. Let me get to your questions, and then we'll wrap it up and call it a day. Okay. Yes, it's being recorded. Recording will be up on the YouTube page. All right. Let's see here. Algorithmic activity, Michael, no, it's not all aggressive market orders, but that example I showed, that very basic example of accumulation is clearly an algo. Okay, but most of the algos are, you see shifts in liquidity in that limit order book, but it can be a combination as well. All right. Yes, RR, this is recorded. Is the sweep in the book a stop run? It could be, but not necessarily whatsoever. And we're going to go over that a bit more tomorrow within some of the structures, okay, looking at microstructures, okay. Ashton, you're talking about looking for a pause. Yeah, well, I mean, you're going to notice that, you know, let's say you see a very aggressive sweep down into an area. Well, we're going to cover it more in the setups, starting to understand that aggressive sweep. Did it auction correctly on the way down or way up? And if that is the case, it will lead to higher probability of looking for exhaustion on the way back up. Yeah, and then that's where you can be starting to place your limit orders. Gunther, no. FX futures Bookmap will work with, but not forex. Okay, not the spot market. The reason being is there's no centralized limit order book. Okay. When exhaustion becomes induction to the opposite side, well, not really. I mean, exhaustion is just the lack of activity. So the market needs liquidity and the aggressor to trade, to be matched for that to take place. Maurice, yeah, we no Think or Swim platform at the moment. Afshin, yeah, I'm sorry, you won't see the other, this is GoToWebinar, you don't see the other people's questions here. Let's see, John. Yeah, the dots in Bookmap are that's the aggressor, right? They're taking liquidity. Okay. Yeah, Afshin. Well, I mean, you read that sweep, understand that sweep and how it's auctioning, and then start to anticipate. And like again, like go through the exercises here, to see it again and again in replay mode potentially here, and then you'll start to get an understanding of exactly what you're looking for. You'll be an expert at it, right? Absolutely, Maurice. This is something Maurice is asking about swing trading and finding volatility for option trades as well. Yeah, absolutely. This is what is distinct and unique here, is that now with the historical limit order book, let me take the candlesticks off here. Okay, so let's look at the S&P right now. Okay, well, you can start to understand, because it's all recorded, even for swing traders, very easily. You can start to incorporate this into your trading. I mean, you look at how we came down into, and we see the buying interest down here on the bid, and then where did it come up to? Okay. Well, you can start to target these areas, start to understand these areas of high liquidity here at 2430 in the S&P. All right. Okay. Let's see, Afshin, more about exhaustion. Okay. I'm not, I mean, okay, so exhaustion, let's just take a look at the current market, right? Here, let's look at some of this trending action, okay? So look at this, I mean, it's not, these areas here, I mean, it's not complete exhaustion, but look at the amount of trading compared to the higher highs, okay? These are higher lows, okay? Sweeps up, okay? And this is, we see it every day, right? We see a sweep up and a return back here, and we see a lack of selling activity. Look at the overall buying here in this area, and we can see that it's uptrending. We see more volume in green, aggressive buying at higher highs. On the pullbacks, we see very little volume, aggressive sells. Okay, it might be complete exhaustion. This is complete exhaustion here. We see nothing that traded here. But look at some of these other little areas here. There's very little. Here it exhausted here. We got a retest though, and we can see there's just really a lack of selling activity. All right. Okay. All right. A few more questions here, and then let's wrap it up. Maurice, if you're talking about, you're talking about the Greeks in options, and I don't know. I mean, how those are going to be valued in your, looking at your IV, for example. Okay, that's something a little different, right? But I think you're still going to see the same type of behavior here. I don't know if the IV is going to go down on some of these pullbacks, right? Potentially, but maybe not, right? So it's a derivative, and that's a little more challenging. There's another layer of information there. Okay. All right, and let me see here. Just a few more questions and we'll call it a day. Afshin, okay, so here's an example of a sweep of the book here to the, in the S&P, you're talking about this 1030 area. Very aggressive. It actually starts right here, and there's a little bit of selling in some of these areas, but look at the majority, right? This was so aggressive and such a quick charge up. Well, there's a complete lack of interest here. We're starting to look at, you can start to see a book flip here as well, start to materialize. They're buying here on the, they want to be buyers here on the bid, but this was aggressive enough that we don't even get a retest of the area. Okay, so we just have a higher trading range up here, right? So that's how you're going to have to start to comprehend by looking at your examples and studying and understand, like you don't get that pullback, right? Look at this sweep here to the higher side. You can start to understand that well, this wasn't as aggressive, right? It didn't take as many ticks to the upside here. We got to pull back to where we actually broke from here, right? So that's how it's going to help. But you're going to have to, start to put those pieces together yourself. We're covering the market basics here, and then we will go over more later in some of the other educational sessions. Oh, SJ, I mean, on average, what's the approximate monthly return using Bookmap? I mean, that's going to vary, tremendously. Different traders, different styles of trading. They might be trading once or twice a day, or they might be trading like hundreds of times a day or thousands of times a day. Yeah, Afshin, the stocks look a little different. There's a lot less liquidity for the most part compared to the futures. All right, guys. Well, yeah, thanks for coming. Tomorrow we're going to go through part 2 and just that review again here. Part 2 is we're going to look at some of the microstructures and the same market mechanics within the structures, right? And we're going to start to get into auction theory and volume profile within the order flow. Okay. All right, guys. Yeah, thank you very much. Yeah, all right. Hope it was helpful, and we'll see you tomorrow. Okay, take care.